Hello traders and welcome to this pre-FOMC intraday strategy webinar on SB Trade Desk. Michael Boutros here with you. Today is Wednesday, June 15th. Great to be with you guys here this morning. Welcome again to the FOMC release later today. Here's your preview. We'll be going over all the dollar crosses as usual. Any questions or trade setups they'd like to review, feel free to drop them on the message board. We did just get the release of PPI here in the United States as well as Empire Manufacturing coming in stronger than expected. Really a notable upbeat here in Empire Manufacturing. Unlikely to see too much volatility on this transferring into price action ahead of the FOMC later today. So take that in stride. Later, ahead of the FOMC, we also do get industrial production numbers and capacity utilization. Most importantly, obviously, at 2 p.m., we'll be getting the FOMC rate decision. Shortly thereafter, Yellen will take the stage for the presser, and that's really where we get some of the minutiae of where the stance of the Fed currently is as it pertains to where we'll be on interest rates. So we'll keep you updated on that on SB Squawk later in the session. And let's jump right into price action. Pooja, good morning. Matt, Mario, Mark, great to see you guys in the room. Lynn, always a pleasure. So before we get started, here's what the relative performance of the greenback looks like heading into today's rate decision. You can see that the dollar is broadly weaker against most of its major counterparts. You do see the yen with a slight gain of 0.05%, pretty much flat. Swissy flat on the session. Kiwi biggest winner with a gain of 0.56%. We highlighted that on yesterday's radar chart. Look, we were right at support literally last night, and that turned out to be the low. So we're rallying here. Near-term resistance is coming up. We're right at the weekly open. So we'll take a look at that. British pound up 0.55% as well. A little bit less inclined to play the sterling dollar here today, guys, just on account of the event risk that you still have on hand, namely the BOE, the UK employment figures, and then obviously heading into next week, everyone's going to be looking for the UK referendum. So that's up 0.55%. Also, Aussie up 0.53, another trade that we highlighted last night. Also looking to check now the weekly opening range high, and we will go over that as well. We'll touch on some just interesting price action that we're seeing in euro pound. I highlighted that setup. It's got a really clean weekly opening range, so I'll be checking that if you want to stay away from dollar crosses. Also, we'll be looking at the euro CAD, which is a swing trade that Jamie currently has on the swing side of stuff as well. Crude is testing the monthly opening range low, so a break here today would certainly reinforce more of a reversal trade in that asset. So let's jump right in. Hey, Adam, great to see you in the room, man. Good morning. So heading into the release, here's what the preview looks like. Let's jump right in. I tried to give you as much update as possible of what we're looking for with these releases. As you guys know, we've been following the interest rate expectations by way of the Fed Fund futures rates. And we've been following this on a day-to-day basis when it matters. And here's what we just wanted to highlight heading into the release. Here's the difference between what we look like last night and what we look like right now. So you can see that there's been a slight revision from last night, and you can see that interest rate expectations have been brought forward a little bit. Interesting, because the dollar's on the defensive today. But a market shift here for the first material expectation, meaning above 50%, now moving up to December. Yes, last night it was at February at 51%. February is now showing 55, December showing 52. So I'll try to give you a tweet on this, guys, as soon as we get the release. You do need to give it a little bit for it to filter through the market, for it to start reflecting in these rates. But certainly we'll be looking to see if this shifts. The biggest thing we'll be looking for is if the July reading starts to move higher. So here are the scenarios. Let's map it out real quick. If we come out, first of all, if they hike rates, which is highly unlikely, but let's say they do, it's going to be almost impossible to fight a dollar rally. Okay, I still wouldn't be looking to chase the rally, but certainly you'd be looking to see dollar moving higher if they do hike rates. That's a no-brainer. If they don't hike rates, which is what we're expecting, and they soften their tone, meaning, the last public announcement, the last public speech that Yellen made, she specifically cited expectations for higher rates, quote unquote, within the next few months. So if they come out with a much more gradual shift, a much more shift to a little bit less of a hawkish approach, I would expect to see the dollar start to come under some pressure. Okay. If they don't hike rates and they come out with a much more aggressive stance, saying, look, we're not doing it now. There's Brexit on tap. There's concerns over what's happening in Asia, but we're still on, on cue for, a July, September type move. If that turns out to be the scenario, you could see a dollar rally into resistance, and then that's where I'd start to look to fade that move. So there's a couple of different scenarios playing out. As we look at the projections, which is certainly going to be the focus, here's what we were looking at the last time around. And I have the link for you right here, guys, on the intraday update from last night. If you click on that link, it'll take you to the updated projections. So for June, you'll see those projections pop up right here at 2 o'clock. So you can sort of track the dot plot yourself. I'll, of course, tweet that on SB Squawk as soon as it comes out. But the previous projections showed a median estimate for 2016 between 0.75% and 1%. Okay, the majority of the committee stands right there as far as where interest rates will be heading into the close of 2016. So we'll be looking for a market shift here and a market shift in the longer run tendency. So if we do see that this moves from the expected median estimate of 3.25%, either members moving it lower towards 3% or members moving it higher, if they do see economic projections starting to pick up, again, you'll start to see some dollar reaction to that development. All right. It's really not whether they hike today or not, guys. It's the projections and what the expectations are set for interest rates moving forward, meaning whether we're going to get a 2016 hike essentially or not. And remember, there's a lot the Fed needs to worry about. Certainly, dollar strength is going to hamper inflation. If they do hike rates, they're going to expect to see dollar strength, which is going to conversely weigh on their inflation targeting of 2%. And again, with the referendum vote and the uncertainty that the UK Brexit represents, it's really, really very, very hard to see them moving on rates today. That being said, this is really the main thing that we'll be looking for heading into the release. Any questions on the FOMC as far as the data, the fundies, or what we're looking for today? Okay, so let's jump right into price action. Here's what the dollar index looked like last night. Here's what we look like right now. We're basically turning ahead of the major resistance that we were looking for, and I still don't want to get excited about this. Remember, I'm personally looking for a dollar high today. Could travel into tomorrow based on the FOMC, really depends what they say, but I'm looking for a spike high or a stretch high sub 11,957, 11,963. Basically, the 100-day moving average, which has offered some really nice pivots in price. Okay, caught the highs exactly last month. That converges on a 764. The 786 retracement is just there as well. You have the median line off the lows, and you have basic slope resistance off the highs. The same slope that we were working with the decline off the yearly high. So I sort of would love to see a scenario, your ideal Goldilocks scenario would be sort of a spike high into this region before moving out. I have a sense here that with the price action we're seeing, we might not get it. Okay, the dollar just might start to accelerate to the downside if all goes as planned. Here's what the 30-minute chart looks like for the dollar. Here's what it looks like last night. So we noted that we were coming into the channel resistance. We noted that we were seeing some building RSI divergence into the high. It ended up triggering to the downside for a nice move. Here's the decline now going through and sitting at the weekly open, just below the weekly open. So we're essentially null on the week, no change. The near-term support, I'd be looking for 11,887, and that's the break I would want to see to get this thing going. Initial targets would be 11,839 into 11,845. You have basic slope support and former fib levels of support that have offered some really nice pivots in price. And that level, again, is last week's opening range high, former trendline resistance, and current median line for the slope we're working at right here. Let me highlight that for you. All right. And again, sort of, we would love to see that spike high into this region before turning out, if we can get it. If we just accelerate through 11,887, forget that notion. Look for that stretch down into 11,839, 11,845 for support on the index. We would really need to clear that 100-day moving average for me to get interested in looking to buy pullbacks at the dollar at this point. Okay, even on a really sudden surge. Watch that region for exhaustion here if we do see a high move on the FOMC. Any questions on the dollar index before we move off? Pretty clean formations. Nice turn yesterday that we were looking for off resistance. We're coming into the weekly open at this point. Near-term support, 11,887, excuse me. All right, so next up on tap is the euro dollar. Also a very interesting setup as we head into the release. Euro daily chart looks kind of ugly to me, guys, so I really don't want to stress what we're doing here. Ideally, again, sort of matches with what I would love to see in the dollar index. It sort of would be too clean for comfort, though, if it does happen. But you have some nice confluence just lower. 11,000, excuse me, 1 point, what is that, 1128? Is the monthly open, okay? You have slope support in there. You have the lower median line parallel in there. The 200-day moving average catches the lows from last month. That stretches just a tad lower into 111. But sort of a region of which, if you do see a sort of spike low exhaustion move, would expect to see or expect to offer some nice entries. Stop against last month's low or even just below that 200-day moving average might be a decent entry. Here's what the 30-minute looks like. This is really where all the bread and butter is. So here's what it looks like now. Here's what it looked like last night. We were looking for, or you needed to see, a break above 112.45 to get this going, okay? You got the weekly open there. You have former or current operative, the median line off the highs from April 11th, or April 12th, excuse me. Really nice pivots, resistance, support, break, resistance, break. Here we are checking it as resistance, confluence with basic channel resistance as well. Okay, and if you tack on a basic retracement, which you don't want to put too much emphasis on, but if you do tack on a basic retracement, you can see that this retracement actually tags on most of our levels right on cue. So the 236 comes in just pips ahead of that 1245 weekly open level, or excuse me, that 1245 level with where the median line converges on it. And again, a 38.2 would take you 1274. We're looking at 1281. So long story short, you're either looking for a breakthrough here and then a pullback to buy, or on a collapse play, if the dollar rallies into the FOMC, I'd be looking for more stringent support down at 1165, 1130. Both areas of interest for possible long triggers. The only thing that would sort of invalidate the broader uptrend, guys, would be a break below 110.92. Okay, basically this region just below the 200-day moving average. Slow. It actually turns out being not only the May low, but a 100% extension, two equal legs, excuse me, a 618 extension of the decline off the highs. And there's that 200-day moving average. So this, for me, is going to be the broader bullish invalidation level. If we break below that, you're essentially taking us out of that broader upside slope we've been working with from the lows. So certainly would have much larger implications for euro losses if we break below this region. Any questions on the euro heading into the release? Watch that interim resistance right here at 112.45. Okay, we are making good time. Next on tap, we'll go through the radar charts: dollar CAD, Kiwi dollar, Aussie dollar. Here's what those look like. Let's start with dollar CAD. First on the daily chart. Okay, So from the dollar CAD, we did probe and break through that 128.30 mode or 30 level that we were looking at. That's the stretch low from October. Remember, the October low day close comes in basically at the highs we just made. So if I take this into the close, October low day close comes in just here, basically what we're testing right now. You have a lot to look at, okay? The upper median line parallel looks like it's been compromised. You also had just a basic slope median line here as well, which we pivot above yesterday, closed above and now testing as support. So for dollar CAD, it's getting a little messy here at resistance. Here's what I want to say. On trades like this, where you're coming into a major resistance barrier, and you're not seeing the trade either react strongly on a reversal play or give you a concerted breakout, you want to be very careful with these types of positions. So on a move like this, if we were going to break this with a little bit more fervor, I would have been looking for that breach to give you a much more concerted, strong upside thrust. With the same respect, if this was going to be a very strong trend line that we were going to react up, I would have liked to see a much more stronger inflection point off that region. But when you sit here and you break through, you sit on it as support, okay? Then you break below a little bit, you pop back above. It really puts a damper on using this slope as an effective means of play, okay? That being said, the slope I'm looking at that's giving us much more bang for our buck is the broader slope that you see here in red. So basic trendline resistance, take it to a swing high, really nice pivot, resistance, a little messy here, but support, resistance. Take that same slope and extend it to the high that we made off on May 10th. Resistance, 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 support, support. And if we take that same slope to the lows, it literally caught the low that we made last week. So I'm using less emphasis on this, more emphasis on this, which keeps us still within the confines of this downside slope. And really the focus heading into the release, if we still hold this range, is going to be on a break either above 28.80 or a break below 28.30. Okay, here's what it looked like again last night for dollar CAD. Okay, as we noted, we were testing slope resistance last night. The outlook remains unchanged. Keep in mind we do have CAD CPI on Friday as well. So there's still event risk on tap for this pair, but we're basically looking for this thing to find some near-term resistance right around where we are now. I mean, I don't know if it holds 28.80 all the way into the Fed. We still have 5 hours ahead of the release, so we don't want to get too excited about it, but essentially looking for the same type of price action we're looking at the dollar index. So you could see a topside spike here, catch that 50% retracement into 129.25 or so, and then move off. But broadly speaking, you're looking for this thing to teeter out. Even if you look at the momentum profile on the rally into the highs, you've been marking divergence all week long. Higher high, higher high, higher high, higher high. And while some of these did make a lower high, if you take a slope, you're just making a series of higher highs in price and lower highs in momentum. Okay. Also note one thing, that slope support that we were looking at, you might have seen this same slope support from last week. You got a couple of breaks below on the spikes, but we've continued to hold that gradient. Last night, we broke below, and now we're going to test it as resistance. So you can see a scenario where we look to test the highs again, and that fails. We'll look to see if we get any play. Not really want to press dollar CAD specifically into the opening range of the U.S. ahead of the release. I do think that Kiwi and Aussie still have a decent play here, even ahead of the Fed maybe. We'll see. But for the CAD, I would want to see this thing show us a little bit more of a key reversal with a break below that Asia low that we made. All right. Any questions on the loonie? Testing near-term resistance. Would love to see an exhaustion high. A break below the weekly open would certainly put this thing on a more bearish trajectory near term. 27.56 is sort of the level I'd want to see. That also corresponds pretty nicely with just the weekly opening range low objectively, and that would certainly put a downside bias for the near term here on dollar CAD. So we're at resistance. Actually, give me one sec, guys. Let me just bring up a 5-minute chart here and see if we have any triggers pending as we head into the U.S. trade session. Okay. So if you remember yesterday, I was talking about this trade that I was in on dollar CAD. We did get that drop into 28.30 in US trade yesterday, right after the webinar around 10 o'clock. We got that dip. It took out 3/4 of the trade. Unfortunately, the last quarter of the trade got stopped out at break even on that rally again back into the trendline resistance. So I'm basically still looking for the same exact setup. I don't see anything here forthcoming that is like screaming at me. There is some near-term triggers. I'd want to see these break with a little bit more of a concerted play into the open here. That's a weak one, but something we'll look at. Um, and again, some building divergence into the highs. Kelly, I see your question there. I don't want to make that association too extremely right now, but broadly speaking, yeah. No, you'd be right. Kelly says, hello, pal. Am I wrong to believe that if dollar CAD drops, will that not have an effect on the Kiwi dollar then rising? Thoughts on all that? So here's the thing. That's a loaded question, Kelly. I'm going to do my best to explain the sort of thought process behind it. So if the singular dollar reaction is dollar weakness, yes, you should see dollar CAD move off from here. You should see Kiwi dollar take off. Okay, but when you're coming into these event risks, the assessment that we make is, okay, if there is going to be a weaker dollar story, what pair is the dollar most strong against now? If we're going to plan a setup for a strong dollar story, what pair is the dollar weakest against right now? Because those are the ones that are going to give you the best buck, the best bang for your buck on an exhaustion or a acceleration play on an event risk, whether it's FOMC or NFPs or whatever. So if we look at these, kind of on its own merits, dollar CAD is right up at the top of its weekly range. Not only that, it's at structural resistance or slope resistance. Not only that, we've been marking divergence into the highs. If we take a look at Kiwi dollar, which we'll shift into in just a moment, that's right at the weekly open. You made a high, you made a low, and you came back for no change on the week. So relatively speaking, the positioning of these pairs relative to their weekly ranges is going to be what I'm looking at when I'm heading into that release. So if dollar CAD's at the highs and it's a weak dollar story, that's my candidate, right? If euro dollar spikes into the lows, okay, and all of a sudden now you get a weak dollar story, a euro rally or a euro long position would be something I'd be interested in. Kelly, does that make sense? I hope I didn't confuse anyone with that. But I think a great discussion to have for sure. You could easily just say, okay, is this dollar positive or negative, and let me just pick any dollar pair. That's not what you want to do, right? Because there are some pairs that are going to give you a stronger dollar reaction on a strong dollar if we get a dollar pop, and there are other pairs that will give you a better dollar reaction if it's a negative dollar pop on the release. So I hope that helps. Kelly says, no, I understand. Awesome. Horace says, thanks for that question. So Kelly, getting some props here in the room. It's what I thought, but your charts answer the question. Visual is helpful. Anytime, Kelly. Anytime. Great question. And also, something a lot of people I think tend to overlook when they're heading into these releases. So it's a good discussion to have, for sure. Sophia, Kiwi CAD. I'm going to write that down. Let me get through these, and I'll definitely take a look at Kiwi CAD for you. No problem. So back to dollar CAD. Any questions on this pair? It's going to be interesting to see. I would love to see, again, like I said, a stretch or a spike into maybe that 50% and then a move lower. At the end of the day, you do have that swing low from the early May, actually the late May swing low that you made there, which also converges just below that 50%. So I wouldn't see outside the realm of possibility on a release like this. Broadly speaking, though, if we do break above 129.20, forget it. I think this thing is going to see some serious upside from there because the daily chart would basically be a breakout from that near-term descending range. Kelly says, haha, go team. Right on. Right on. All right, so that is dollar CAD. Next up from last night's radar charts, we were also looking at the Kiwi dollar. And this is a trade, again, that you brought up, Kelly. Here's what the daily chart looks like. I don't like the daily chart still, although I have to admit, yesterday I was kind of making fun of myself. We were talking about how this thing probed through this huge region, and why would we still watch it? Because we haven't gotten many inflection points off it. But guess what? Here it is. Okay, tonight's low came in right at 69.62. 69.69 is where the 50% rests, and the range we've been watching for a good 4 months now. Okay. Also remember, you have that basic trendline resistance from the October highs, which also converges as support in this region into the close of the week. So key support, we hit that yesterday. And in fact, if you guys look at the commentary, from last night's radar chart, I basically was saying looking for support here, basically, as we tested the 69, 64, 69, 65 level. You had a really nice confluence of not just the 100% extension off the high, which is basically 2 equal legs down, but you also had a convergence of the 38.2 retracement of the advance. And I tell you guys this all the time. These are my favorite setups. A nice extension off the high that overlaps into a retracement off the low will typically give you some really nice inflection. It won't always hold, but guess what? If it breaks, it's probably going to be a major drop-off. If it rebounds or it inflects, you'll probably see something like this. Okay, so again, this thing just simply came up into the weekly open. Near-term resistance, as we highlighted yesterday, 70.35 into 70.48, major area of resistance near-term. Okay, you're looking at the weekly open. You're looking at a 236 basic retracement, and if we hold above this level right here, basically let's call it 70.20. If we hold above it, it would suggest we're back within the confines of this formation or this slope, and we'll designate that as a simple false break scenario to the downside. Okay, this is really what we need to clear, the weekly open, I think, to get a little bit more validation for a continued move higher. Your initial targets would be the weekly opening range high that takes into 70.80. The high day close comes in at 71. Okay, and then obviously the stretch highs that you made for the year. 71, 45, 71, 53 is that key 618. So the levels are pretty clear as far as the Kiwi is concerned. You're looking for a break of this key near-term range. 70.48 near-term is going to be the bearish invalidation level, and I think the breakout that gets you the upside play in the Kiwi if this thing is going to rally. Kelly says, I rode the short nice for 80 pips on this yesterday. Appreciate that call. Kelly, on which one? On this pair right here? Nice. Yeah, very nice. I mean, that support barrier was so huge for me. Like, if it, let's just say this: if it had, I would have been really mad if it broke. Let's just, I was over leveraged on that one for a little bit, but you had slope support, channel support. When you get these three-way confluences, it's nothing I'm gonna, ignore. Not only that, but use the momentum. This is where the momentum signature, guys, becomes something of use, right? Forget all these, crossover. Oh, wait for 70 and wait for 30. These are things, yeah, if they come and happen, cool. They'll give you an indication. But on a trader, for someone who's sitting at the desk day to day, getting in and out of positions, it just isn't feasible. You want to use the oscillator in more inconspicuous ways, less reliant ways, and this is one of them. Okay, as you're coming into that key support, you're marking divergence like whoa, right? Doesn't necessitate that this make higher lows. Even if the oscillator makes equal lows, but price action's making a lower low, that's still divergence. Remember, a definition of divergence is that the oscillator is not showing an extreme in price. Okay, the extreme in price is what matters. So as you made a new low here, you didn't make a new low in the oscillator. You followed it by a resistance trigger break, and that's sort of your ideal play here for a near-term position. Kelly says, good presentation. Got it out of my head to trade with my head as I wanted the Kiwi lower, but what you are showing. So yeah, watch that key support barrier, Kelly. I mean, unless that breaks, I'm not really interested in getting too aggressive. If it turns down from FOMC, so let's say the dollar rallies or they come out like super hawkish, you see Fed fund futures pop up into a July expectation or something like that. A break below 69.64 or 69.66 is likely to be pretty quick. Pretty quick. Absolutely, Kelly. Couldn't agree more. He says, I see it clear now, showing us the 72 or the 70-20 level. Nice point for us. Trade the levels, not the heart. Right. Hope is not a strategy. Luck is not a strategy, although it can help. He says, I'm typing in the dark, so I sound like a buffoon. LOL, but you make things clear for me. No problem, Kelly. No worries. I'm getting the gist of what you're saying, so as long as that comes across, I think we're okay. So Kiwi, I'll definitely be watching this today. As far as Kiwi data is concerned, you're pretty light for the remainder of the week, so look for dollar price action to really drive the pair. And like I said, we're unchanged on the week at this point heading into the release. So we'll be looking to see if we can get that dip, either to find some support near 70 or 69.60, or that breach above 70.50 to put the long side back in play. Any questions on Kiwi? Whoops. Okay, next up on tap is Aussie dollar. My notes say top side. Okay, last night broke, and we're also looking at near-term resistance. So here's what Aussie dollar looked like last night. Here's what Aussie dollar looks like right now. First on the daily chart, just wanted to highlight that 73.60 mark. If you guys remember, I was talking about that in the webinar. Really didn't like the fact that we were breaking below it. A close below it last night by just a hair. Literally last night the close was 73.55, so literally 5 pips below. Kind of had me confused. I really didn't know what to do with this thing. I could have seen this going both ways, either breaking down and looking for that dip into the yearly open, which it still could do, okay, or a nice rally as what we're seeing right now. So for me, today's close is going to be paramount. If we spend another day closing above 73.60, I will continue to favor the long side. 73.60, by the way, just for your reference, is the October high day close. We've seen some really nice pivots along this region, and it converges on a whole bunch of stuff. You got the median line off the highs, the 50 line off the lows, the broader. Oh, I did this yesterday too. Nope. So all three of those converge near that 73.60 level. Long story short, you haven't made an outside reversal day, but you look like you are making a reversal day if we close higher on the session. And momentum, again, struggling to hold below 50 is actually kind of constructive here. So here's what it looks like on the 30-minute, and here's what it looks like, or here's what it looked like last night. So the basic premise was, look, if we break above 73.75 near term, you're likely to see a rally into the weekly opening range high. And if that happens, now you've got a really clean setup into FOMC. The range being 73.25 into 74, a little bit larger of a range here, but so is the print. Today is a significant print, a significant event risk, and you're looking for a break of this range. For me, as I noted last night, a topside break is sort of what we had favored here. Right here. We would need to recover above 73.75 to put the recovery play with a breach above 74 needed to mark the reversal higher, and that's what is favored on this move. So last night, again, very similar to what you were looking at in Kiwi dollar. You didn't get the divergence signal that you got in Kiwi, and that was something I was very interested to look at. So I was looking at this drop here, hoping to see if we get one last drop to mark some divergence, because to me, that would have been an easy play. With momentum giving you the divergence signal into a trigger break. You didn't get divergence, but you certainly got a clear trigger. It's a 4-point touch. 1, 2, I wouldn't even call that. So 3-point touch. Nope, 4-point touch trigger. Okay, and the top side break sort of gave you that indication that you'd look for that rally towards 73.75 and above. So your weekly opening range is set. I like buying or constructive approach above 73.60 again, no change. We've broken below or above, that descending channel formation. So I wouldn't put it outside the realm of possibility on FOMC volatility to see it drop back in to former channel resistance as support, then move off. If we break back below 73.60, I want no part. Okay. Topside break above 74. You're looking for 74.45, 74.89, 74.90, and the upper median line parallel. If we break 73.60, and specifically if the opening range for the week gives out, the major key support, I do have the 50 here at 73.23, but the major key support comes in at 72.82. Absolutely paramount. That's the yearly open, 2016, and a basic 618 retracement of the advance off the lows we made last month. That's a confluence you do not want to ignore. Basic channel support also converges on this region into the release, so right into the 2 p.m. hour. So that's going to be the key critical support barrier for gold for Aussie, And if that gives out, it really puts a much, much, much steeper bearish tone for the Aussie moving forward. Long story short, looking for favoring topside here in the Aussie if we break the weekly opening range high, looking for long triggers on a move into 73.60. Any questions on Aussie? Keep in mind, we do have Aussie employment data later tonight. Here's what that looks like. Whoop. We are looking for Aussie data to show a gain of 15,000. That's from a previous build of 10.8 thousand. Unemployment's widely expected to hold at 5.7%, but we are looking for a possible uptick in the labor force participation, which would be a welcomed print if we did get that, specifically if we see unemployment hold 5.7 and the participation rate increase. That's a really, really strong sign that you're getting the labor markets back on firm footing. So that's later tonight, 21:30 here in the United States. So keep that in mind on the back of the volatility that we get today from the FOMC. There's still more on tap here for Australia. Okay, so those are the setups I'll be tracking into the release today, and I think you want to keep your eyes on the focus, or you want to keep your eyes focused on some of these dollar crosses because a lot of them are trading at really nice areas of which we do get the start of a rebound or the start of a reversal play. I think you can get some really nice stretches. So if we do time a decent entry on some of these guys, or you do find yourself at the lows long or short off the high, this is a session where if you do get into that position, I'm really much more mindful into taking little pieces off. I don't want to cut full exposure. So just as yesterday, during the webinar, we were in that dollar catch short. We took 20 pip gain. As we moved into that 128.30 level, we took another quarter of the trade off. Kind of as it hovered there for a while, momentum started to level out. I took another quarter of the trade off. This is what you want to do in environments like what we're seeing today. So if you catch yourself in a really nice entry, look for it to stretch. Okay, hold on to a little bit of it. As soon as you take something off the table, you always want to bring your stops to break even as far as a scalping or a near-term intraday strategy is concerned. Because once I take something off the table, I'm not going to take a loss on that trade, right? So I'm always going to bring the stop to break even or better. And let's see if we can get that stretch into the next support or resistance target. So just some words there for major event risk releases like we're getting today. Okay, let's jump into some of the other crosses. If you're looking to diversify or to stay away from some of the dollar event risk that you'll see today, Euro Oz, here's a setup I put on Daily FX yesterday. I don't quite think it's ready for a play right now, per se. I wouldn't put it past this thing to see another stretch towards 79.85. But let me snap the levels for you here. Here's the broader setup. Okay, you have a really nice pitchfork extending off the highs from 2012 and 2013. That comes into play right above this 764 retracement. And in fact, if you turn this into a 786, it converges right up there. I'll leave it here now because it actually caught the advance we made earlier this week. But you have the median line off the low. You have the former or current operative upper median line parallel for the broader formation, and that 764 converging here. The weekly opening range is now also 79.85. So you have clear-cut resistance, momentum, failing or looking like it's turning ahead at 60, so you don't have really that sharp, steep upside RSI that you expect to see on sort of a continued breakout. So here's what the near-term setup looks like. And for me, what I wanted to highlight here was just the weekly opening range looks pretty set. It does look like it may be making some sort of triangle wedge formation. Typically, these are not terminal. Typically, these are continuation patterns, so you'd expect to see a topside break. But basically, what I'd be looking for into or from a price action standpoint, obviously, you're not going to get quite as an abrupt play on this from FOMC, but you should see some reaction, is I would love to see another spike into this region. Same highs, right along that median line, and that would be sort of a hold at 16 momentum maybe, or a nice downside trigger, and that would give us a nice opportunity to push a short here. Now, I would only be looking to play this for a near-term pullback. Okay, you've been getting some divergence all along the highs like no one's business. So I would love to see a little bit more of a pullback. A downside break would shift the near-term outlook lower of the opening range for the week, which is at 78, 77. And you look for targets right here at 70.30, 70.40, 77.75. And I'd look to call it quits right down near 77.25, 77.34. Stretch this out for you. So feel free to take a snapshot of this chart, guys. Again, another pair that I'd be looking at if I want to stay away from the dollar exposure, or if I have dollar exposure and I'm currently holding a position. This is a pair that could give you a little bit more of an isolation type of trade away from that event risk. Keep in mind, it is sterling pips, so it'll be worth more. I've been shifting my focus to about 33% of the quarterly ATR here for a profit target. Typically really tight, quarter of the daily ATR here will give you somewhere like 15 pips. So, that's not really a strategy I'm interested in, something that tight. So open it up a little bit. 33% gives you 27 pips per scalp. And again, we'll look to see if we can clear that opening range heading into US trade today. If we clear it to the upside, so if we clear 79.85, you're looking at 80.15, you're looking at 80.53, and the high day close right at 80.92. Again, ideally, spikes into a high, you look to fade that up near that median line. Any questions on Euro Pound? It's an interesting setup. Again, I don't think it's quite primed for the play just yet, but do keep your eye on that weekly opening range, especially with the consolidation that we're seeing both in momentum and price. Would be a decent breakout, I think, once we finally clear this range. And that is Euro Pound, my friends. Moving right along, I just want to touch base real quick on Euro CAD. I know that this is something that Jamie was looking at last night as well. I know that we spoke about it here in the webinar too from earlier in the month. The outside reversal day that we made here earlier did shift the focus lower, but look where we bottomed last week. The Friday low came in at an exact 1618 extension from decline off the May highs. So while I don't really like what price action is doing on the daily chart, a couple things to note. Momentum trigger, break, support, support. That still keeps the focus more on an upswing play. Just like when you break resistance turns into support in price, so does the same happen in momentum. The near-term chart looks like this. Okay, you guys remember this one. I haven't really changed the slope from last week's updates. It's all the same, but a basic retracement of just last week's range. This is just the decline off of last week, or I guess this was, last week's range, gives us near-term resistance right here at 44.75. So you have the 50 line for the current operative slope and a 382 retracement converging right here. That's a near-term resistance target. And if we breach the highs, I do think that the weekly opening range break here does validate us to look higher towards the upper parallels. The opening range for the week has been offering really nice plays for EuroCAD for the last few weeks. I'll bring your attention to the late May trade. You had the weekly open, you stretched into a high, you came back after testing the lows, previous sessions broke, made a late week low. Next week you set an opening range high. On Wednesday or Tuesday morning you break, test it as support, make a late week high. In fact, you closed the week at the highs. Last week, the opening range was exceptionally tight. You really didn't get much of a chance to get a range in. It kind of just broke right on the open of U.S. trade. This week, again, Monday, Tuesday stretch, we're still within that range. It defended support and it held. On a topside breach here would validate a near-term bias looking for a late week rally. So another pair, I'm on board with what Jamie's looking at for this EuroCAD trade here. Questions on EuroCAD? All right. So that's EuroPound and EuroCAD in the books. I haven't forgotten about your question, Sophia, KiwiCAD. I'll go over that in just a moment. I just want to touch on crude while we're on this, the equities charts here. Here's what crude looks like on the daily chart. Guys, we're testing the monthly. It looks like it's given out. So watch today's close will be paramount. Okay, remember 47.73 is the weekly. The monthly opening range low. So certainly the start of the month, we came up into a critical resistance. We talked about this over the last couple of sessions, so I don't want to exacerbate that conversation any further, but certainly the reaction we're getting and a move into the monthly opening range on a downside break here would certainly validate a reversal trade in oil near term. We talked yesterday about the trigger break we got in momentum, about the outside reversal off the highs, about the break of these median lines. And again, we'll be looking to see if we can clear the last ditch effort would be a hold at the monthly low. If we do push below that, I would look to tack on a basic retracement. Let me just show you what that would look like. A basic 236 comes in at 45.50, and that's just below the high day close that we made for April, which came in at 45.98. The high day close for April was also the May open. Okay, so key range of support right here if and when crude does finally clear the monthly opening range. All right, any questions on crude? I'm just going to clean this chart up for now. If we need those downside targets, we'll bring them back. Okay. Again, don't be surprised to see a spike back into former resistance first, or a spike back into the monthly open before you move off. But broadly speaking, we're looking for that. Mir says gold. You got it, sir. Here's what gold looks like. I'm gonna tell you this. I literally have this written in my notes from last night. I said we're in no man's land. I don't know why I wrote that. Well, I do know why I wrote that. It's just because from this standpoint, I'm not too crazy about the gold trade. I mean, I wish I had some more clarity on where we are reference to a near-term type of trade setup. Again, like I said yesterday, guys, it's not just about knowing the directional bias. It's about having a setup, a trade ready to go. And I don't have anything here, Mir. I guess if you're holding longs, I'd want to see this thing continue to hold above the weekly open initially as an immediate sort of invalidation for the long bias. That comes in at 1273. Would be like where I want to see this thing hold support, just to keep the immediate upside bias in play. Near-term resistance on the stretch. I was looking for this stretch with the close that we made here on Monday to get us a move back into the 2015 high week close, which was the exact open for May, 1293, 1291. We talked about the 2015 high day close, which comes in at 1301. 200-day moving average comes in at 17. Excuse me, this is the 200-week moving average, comes in at 1313, a little bit higher. So the levels are exceptionally clean as far as top side objectives are concerned, Mir. On a pullback play, I'm not interested. Here's what the 30-minute looks like. I guess we can take a look at that at this point. This is a definition of what an exhaustion trade would look like on a near-term prospect as you mark continued ongoing divergence for days and days and days. And this is a good example, guys, of why we never want to stress any oscillator, because they do not take anything from a time factor into the play, right? You can mark divergence for 2 hours before it turns. You can mark divergence for an entire week before it turns. So I don't necessarily have any major fib levels here. I don't necessarily have anything besides those stretch highs that you made back in May. And again, I think on its face, this thing does look like it's getting a little bit tired. I think you're looking for a trigger, a catalyst here in gold to get this thing going. And it very well might be today's FOMC policy decision. And if you see some serious dollar strength, look for this thing to pull off. If you see the dollar sell off, which is what we want, right? We want some dollar strength initially to sell off. If we do see that materialize, I still don't think the upside could keep going much further on this stretch beyond these levels here. So for me, for a trading standpoint, even on the long side, I mean, there's not much to scalp even. You don't have many swing lows. You don't have many, key regions of support here. Like I said, I want to stay constructive about above 1273, but, I'm not going to target 1293, $10 up and $10 on the downside in a gold trade. That's just not my style, at least not for gold. So near-term support at the weekly open, Mir. The top side targets from here. 1291, 1293 would be first. 1301 would be second. 1313, that 200-week moving average, would be the final target to the upside. If you see a break of the weekly opening range low, or the weekly low, excuse me, the open, tag on a quick retracement here and see where the levels take you. Let me see what it looks like. Bear with me one moment. Okay, those look pretty good actually, so bear with me. Let me just clean this up a little bit. And I don't even think you need this at this point. Okay. So these levels I'd be looking at are levels that matter for today. Okay. 1273 weekly open. 1268 would be just a basic 236, so sort of a cushion of initial area of support you'd look for if we do see a drop off in the pair. This break would certainly give me a little bit more conviction for a drop back towards basic trendline resistance, now support, and that converges on some interesting levels. A 38.2 would give you 1255, 1251, of course. That was a weekly open a few weeks ago. That's not going to be important, so keep this in mind. And then most notably on this one, Mir, if we get some slope to give this thing guidance near term, I would love it. This is way too near term, but I just want to see what it looks like. Could be something to watch heading into FOMC. All right, Mir, long story short, the trade remains constructive, broadly speaking. Let's call it 1255 right now. Okay? Near-term support for the immediate upside bias, I call 1273. And, a topside thrust, we went over some of those topside targets if you're holding the long. But the broader structure stays constructive. If anything, and you do get a downside break, it would just be, I would just be treating it as a corrective trade, which means the near-term outlook is lower, but you'd be losing that decline to inevitably give you some more favorable long entries lower down. Mir, does that help on gold? Hey, you're more than welcome. More than welcome. Says thanks. Okay, Kiwi CAD. We're running towards the end of the session here, so let me jump into Sophia's question. Kiwi CAD. I haven't looked at this one in a while, so give me a minute. I can tell you right off the bat, we are now checking the 2015 open, oddly enough. Nice pivot in price that we've seen here over the last few months and last years. Interestingly enough, this slope that we were following off of last year's low, I remember I was looking at this last month, we just simply extended some parallels up that same slope off some lows that you made in recent price action, and again, it continues to catch. So again, you can see here today we sat on this as support, spike below it, gave us a bounce. If we do mark a reversal day, an outside reversal day off this level, it would give us a little bit more of a conviction for a topside pop here in Kiwi CAD. It's tough on this one. There's a couple things I'd be looking at that are a little concerning for me. A, you're continuing to hold sub 60. So on a breach of the weekly opening range high and a breach above 60 on a close basis for this one, Sophia, I think would validate a move back towards 91.65 or so. That being said, I mean, that would be the major next topside target for sure. You see a basic slope line here. Support before a break, resistance before a break. The underbelly of it converges on that 91.65 level. And again, lower median line parallel also in this region here. See what it looks like on the near term. Okay, here's your weekly open. Oops. Okay, so from a near-term standpoint, Sophia, this thing has basically just set a very simple weekly opening range. Here's your weekly open. You set a high, you set a low at fib support, you test that high, which is what we're doing right now, and you basically want to look for a break of this range near term to validate a near-term breakout or a near-term directional bias. Over the last few weeks, you've seen a couple of decent weekly opening range breaks, namely right here in mid-May. Weekly opening range broke out here on Wednesday to the downside. We closed that week right at the lows. The following week, the opening range break happened on Tuesday. That closed the week at the highs. So you've seen some really decent weekly opening range breaks in the pair. I think this is one of them. The broader focus for me, I still would like to see a pullback to give us a little bit better of a positioning. I do like the upside bias in general, generally speaking, let's call it. But I think you're still at risk here near term. You think may be at risk here near term. I wouldn't want to chase the high unless we see a break and retest of the weekly opening range high. But those are the levels I'd be looking at. Looks like it has been too long since I updated this, so it's the low day close. Let me just clean this up. 236. We can leave that. Yeah, the levels look pretty good. Decent ATR. Quarter of the daily ATR gives you about 25 pips on this one. But Sophia, hope that helps. Interesting pad, Kiwi Cat. Sophia says, thanks a lot. Hey, you're more than welcome. It's an interesting pair. We'll come back. Looks like I'm definitely going to be revisiting this one. You've sparked an interest in me here. Yeah, we'll come back to this one this week. But look at these levels. Take a snapshot of this if you need it for future reference. So, guys, we'll wrap it up there. Again, we'll keep you updated on SB Squawk as the release happens. Look, just stay nimble, okay? With these kind of things, it's never like NFPs where the release comes out, oh, better or weaker than expected. They cut rates or they didn't cut rates. No, we know we're expecting that they're widely not going to cut rates. The devil's in the details. We'll be looking at those updated assessment and projections. But really, even beyond that, the presser with Janet Yellen, who knows? There's a slip of the tongue, something happens, and you see some crazy reaction in the dollar. So just stay a little bit more nimble. Keep the powder dry. We'll keep you updated on SB Squawk. Remember, the midweek strategy webinar got pushed back till tomorrow in light of today's FOMC decision. So Jamie will be all set tomorrow for that session. I will see you guys bright and early tomorrow morning for a nice recap of the aftermath of the FOMC. Best of luck trading today, guys. I will see you tomorrow morning. Cheers.